Good evening everybody, and welcome back to episode 61 of Open Crypto, where we keep you informed on a bi-daily basis. If you are interested in keeping fully up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. So tonight we're going to be talking about an article from CNBC's cryptocurrency section by Hannah Ward Glenton, and it's titled "No Signs of Crypto Spilling Over into Traditional Assets Yet," analysts say. And this is to say that when crypto goes down, that there is a correlation between the say the S&P 500 or the stock market or the Nasdaq, that they would, for one reason or another, trail Bitcoin or trail crypto. So if crypto goes down, then the other assets also, like stocks and shares, would also go down. I personally think that it's the other way around. The other way around, because crypto is in its infancy. We actually follow the legacy financial world. So when bad things happen in the real world, and when bad things happen to companies or the US economy, say for example, and it goes down, then we usually go down in tandem. So it's not the other way around, but we'll see what they've got to say here. There are no signs of spillover from cryptocurrency into more traditional assets, according to an investment analyst from ajbell. Following the multi-billion-dollar collapse of exchange platform FTX, questions have been raised about whether cryptocurrency could impact other assets. There are no signs of spillover from cryptocurrency into more traditional assets, according to an investment analyst from ajbell. Billions of dollars were lost when the exchange FTX collapsed, raising questions about whether movements in the crypto sphere could ricochet through to other financial systems. Crypto has a lot of money, but it's kind of built up as a separate ecosystem, head of investment analysis Laith Khalaf said on Squawk Box Europe on Wednesday. But that doesn't necessarily mean there couldn't be some overlap in the future. If we had a more system-wide issue, you could start to see it affecting other assets, Khalaf said. But I don't really see that, he added. In two separate court filings, FTX's lawyers said in November that it likely had more than 1 million creditors and owes its top 50 unsecured creditors $3.1 billion. The founder and former CEO of the exchange, SPF, was then charged with defrauding investors on Tuesday after being arrested on Monday. A highly volatile asset. Khalaf was reluctant to make predictions as to where cryptocurrency will go next because it's so changeable as an asset. We could be sitting here talking this time next year and Bitcoin could be at $5,000 or $50,000. It just wouldn't surprise me because the market is so heavily driven by sentiment, Khalaf said. And while there are questions as to the long-term adoption of cryptocurrency, Khalaf made one point with a lot of certainty. For the foreseeable, cryptocurrency remains highly volatile and speculative asset, he said. And that's so true, because it's in its infancy. It really is like the Wild West, and people speculate from all over, and where there's speculation, there's leverage. And leverage is just another word for debt, basically, sort of planned debt. And because of that, when we get liquidations, and it doesn't have, because we're not such a massive sort of a massive sector, isn't crypto, when you compare it to bonds, when you compare it to stocks, any market, even the FTSE in the UK, we're nothing compared to that, or precious metals, we're really tiny, and so it just attracts a lot of speculation. And so because of that, people put on leveraged trades, and where there's leverage, there's liquidations, because people get it wrong and make mistakes. And unfortunately, those liquidations, we don't need, because we're have such a small market cap, we don't need many big liquidations to happen for it to affect the price. And it has this kind of cascading effect. If Bitcoin goes down by 5 or 6%, people who are long will get liquidated, and that means that their assets are being sold in very quick succession, causing it then to go to 6%, 7%, and this of course causes even more liquidations, going down to 10%. So it's kind of a domino effect that, and this is why crypto is so volatile, because of this, mainly because of this liquidation, these liquidating events that happen, because there is so much speculation. So it's only a short one, but it's quite interesting to think about And that's why we have so much volatility in crypto. So that's what I've got for you. Like I say, it's just a short one I've got for you this evening. Remember everybody to subscribe to the channel, join our team, and we'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.